Trading is the road to financial freedom, but it's a road filled with twists and turns. Stay committed and you'll get there. Remember, great things take time.
All right, welcome back to the channel, guys. Welcome back to Wealth Wise Guru, and I'm your host, John Shaft. And we are at the closing of the bell again today, and it is a Friday, June the 28th, and the market, stock market bell has closed, and it started out a pretty good day. Portfolio was up like 2,500. I think it got as much as it's got up as much as $3,000, and then all of a sudden it took a dip, and it went down. It went way down. It has since recovered just a little bit. So I have a loss of $336. But I also had a option to come through from the HIMS corporation, and that option net me $2,000 in profit. And so what I did, I did not take any of that profit out of my portfolio, but instead I turned around and reinvested into the market. So I actually put an option trade in on the S&P 500, and I think I put in about, it was either 1,000 or either 1,500. Might have been 2,000. So I put in just about everything that I made a profit with. But it's pending its quail because of the market was closing when I put the order in. And so you guys, in order to grow wealth, when you do make a profit, you have to turn around and put that profit back into the market. That way your portfolio can continually to grow. So you can't always take it out like you would want to and go and spend it on, whatever. And the only time I really take profit out of the market or out of my portfolio is when I want to take a trip. And I have a traveling YouTube channel as well, and I travel around the country, and I travel to different cities, states, resorts, amusement parks, things like that. And I bring you guys my thoughts on that travel. Matter of fact, earlier this month, I just come off of a cruise, and I went to took a cruise to Hawaii, and we actually I was there actually on a cruise ship for about 7 days. I caught the ship out of Honolulu, and we sailed around to about 5 other different islands, including Mali, and I didn't know there was that many islands that actually makes up Hawaii. But that's what I do on my other YouTube channel, and it is called Voyager Richter, Your Passport to Adventure. And there's so much stuff to do in Honolulu. There's just no way I could cover everything on one trip. And so when I take profit out of my portfolio, is what I use it for. Take trips, and that trip, I know that was over. That trip probably was over $4,000 with the plane and the ship, cruise ship. Then you have onboard expenses. And then I had a hotel bill and meals, and had to catch an Uber. But yeah, that was. I think that was bad. That was probably one of the most expensive trips I have taken. And it's probably second to Vegas, because I've been to Vegas also. And then prior to going to Vegas, I was up in Orlando, and I'm going to be making another trip, or at least planning another trip next week. And I'm going to be using some profit out of the market to cover that trip. So that's what I do with my profit, and I try to grow that YouTube channel. If I keep do it long enough, eventually that it'll pay off, and that channel will start making money on its own. And once you create a channel like that and you keep it up, keep it going, the longer you have that channel in existence, the more profitable it becomes. And that's all in the game of wealth, trying to build wealth, and trying to live your best life. We all just get one life, and life is short. Cause I just turned 62 yesterday, and it doesn't even seem like I'm that old, but it seems like I got here pretty fast too. But life is short, and we should all try to live our best lives, and not live your whole life working for others. And so that's why we have the stock market. We can invest in the stock market and build a portfolio. And it doesn't really take that much money to build a portfolio, especially if you're young. You 20, 30 years old, and you got him just goofing off. You're wasting time. You should be putting that money aside. So when you get my age, you don't have to be out here still trying to work for somebody. And I don't work for anybody. I am in charge of 100% of my time, and I do not share it with anybody. And so, I started working when I was 15 years old, and I've been everything from a law enforcement officer, state trooper, cadet, deputy sheriff, police officer, correction officer. Then I decided I wanted to get out of law enforcement, and decided to go into truck driving. Drove a truck for almost 20 years, and I was forced out of that because I was an owner operator, and fuel prices got too high. So I came home and started a commercial cleaning service. I have been in the commercial cleaning business off and on for probably at least 30 years. And I just recently, early part of this year, I sold that business and retired. So now I consider myself full-time stock market investor, and also a YouTube content creator. And nothing brings me more joy than to wake up in the morning and to be able to invest in the stock market. I really, really look forward to it. Matter of fact, I hate when the weekend come around because I can't invest. But it has been a rewarding journey, and I hope to continue in doing so. Continue investing. And to you all that do not know how to invest in individual stocks, then you need to get into the S&P 500. The S&P 500 has everybody in it. Everything from tech, medical, real estate, retail, um, it is a whole lot. So you get into the S&P 500, it covers everybody. And the S&P 500 is the safest it's the safest stock that you can actually get into, the S&P 500. And it's basically ETFs. And so I took about $2,000 a day and put a option trade in on the S&P 500. And like I said, it's been quail until the next business day. But I'm anxious to see how it would turn out. And the day before yesterday, I must be a squirrel or something here. But day before yesterday, I also put a debit spread, and I also did that on the S&P 500. And the S&P 500 is the only stock that I would actually do a debit spread or a option in, unless it's one of the Magnificent Seven tech option. I mean, tech companies. But yeah, if you're gonna put an option trade in on anything, let it be something that involves tech. Then if you can't afford tech, then you just get you a less value company until you can build up your portfolio. And you might want to get you a company that's trading at $25, $7 or $10, and buy 100 shares of it, and you buy 100 shares of it, and then you put an option trade on it, and you sell it. Because that's what I did with the Hem Corporation. I bought 100 shares of the Hem Corporation. I think it was like $7. And when I first bought it, it didn't do too good. Matter of fact, I think it cost me about maybe $200 or $300 for 100 shares. And it went all the way down to like $5. And I did what you call a roll out position. And a roll out position is where you can roll out of that position if you're losing money. And the way you do that, you just go down to the stock and you click on trade. Um, let me see this. I believe I shared that with you guys one time before. Let me turn this camera around. Yeah, I'd like to welcome you guys back to the channel. Welcome back to WealthWiseGuru, and I'm your host, John Shaft. And we are at the end of the closing bell, Friday, June 28th, 2024. And I thought I was just looking over my portfolio. It's down a little bit, but I had a option to come due, and I made $2,000. Even though my portfolio was down, uh, I forgot how much it was down. It was down maybe like $1,000 or something like that. But anyway, I was able to make $2,000 off of an option, and I'm going to reinvest that part of that profit back into the S&P 500. And I thought I would come online and show you guys how I execute that. See, you go here, simply put in a 1. Here you put in 1138. The max cost is $1,138.03. So I had to cover this loss, and this is what I have available in order to cover that loss. I'll simply go out here and hit review, and I hit submit. Okay, so I just placed a call in SPY for 9:30. It's quail because the market's closed, so it won't go through until Monday. I have to Monday at 3:15 p.m. in order for this to go through. And I just simply hit done, and I will go back out of this position. So it's still saying I have $2,000 available buying power. I guess because it didn't take it. Oh, okay, it did. It just went down. And here's the pending order I just put in right here. So anytime that I wanted to, if I wanted to change my mind, I can hit either cancel, or I could simply replace that order. So I thought that was a good order. That's why I placed it. I just wish I had did it earlier. That way it could have went through. My position last night in S&P 500. One was 167 and the other was 120, and they're both are down today in the red. And that's gonna happen. Sometimes you're down, sometimes you're up. But they don't come due until to the end of next month, end of July. And again, if you want to roll out of a position, you just simply click on that company that you had the option trade in with, you'll click on trade and you'll click on roll position. And then you select new position. And then you go up to the top. This is your date. You can either go 30 days, 60 days, or 90 days. The longer you go out, the more profitable your trade will be. And so my favorite trade is what I call a leap. I mean, leap is when you're jumping from year to year. So I would jump out to like the end of 2026. So you click on 2026. Like I said, anything below the strike point, which is 197.78, anything below it is into the money. Anything above it is out of the money. Anything below it's gonna cost you more money to put a option in on this trade. It's gonna cost you more money. It's gonna cost you less money if you go up to the top. We'll scroll on up and see just how. And this is what I did with the Hem Corporation. When I got down to $5, I simply just clicked on it, and this comes up. Chance of profit is 12.37%. Volume is 430. That means that's other contracts on this particular option. And the number of people that are interested is 5,798. The IV means the vitality of the stock. And from the higher the IV, the vitality, the greater chance of you being profitable. This is real high. And matter of fact, I wouldn't even put an option trade on any stock if it doesn't at least have like 30 or 40 or 50% of volatility. This is the last trade of that particular stock, which is $33. This is smart trade $32.70. Bid price is $32 and asking $33.40. So the way you roll, you just simply, oh yeah, and then the delta. Don't forget the delta. Closer to at one is also make sure has something to do with you being profitable. And it's between 1 and 9, 9 being the furthest away. So your idea would be want to get like 0.7 or 0.6, nothing lower than that. The closest to a 1 that you become, the more profitable this trade will be. And so you'll simply hit on roll, then you'll hit continue. Then you'll simply go up here and put 5 in, then you will hit 32.52. This is the estimated max cost it was going to cost you to cover this particular account, which is $16,230. I know most of us don't have $16,230. Let's click on it anyway and see what will happen. It's asking for a deposit. And see, and this is what you'll be needing to have in your bank account in order to cover that trade. I know a lot of you are probably saying, I don't have that kind of money. Trade like that. Well, what you do, you get a lesser value stock, a stock that doesn't cost so much. So let's scroll down and see what kind of lesser value stocks that we could actually make a trade, an option trade on. Here's one here, the VGT. VDT, Vanguard Information Technology. Well, now we don't want to use that one. That's $577. So that's kind of expensive there. See, let's go to NKE. Oh, that's Nike. Nike is $75. Trying to get one that's really, really low. So you guys can see, no matter where you are in your journey, you can still do option trading and make yourself some money. It just takes you a little time to build up your portfolio. So this is Global X Dow 30 cover call ETF, $22.13. So you simply click on trade and you click on trade option. And you would go out. Let's go out. You can either go out. You can go out 30 days. You can do my favorite, which is Elite. Sometimes it's hard to get this thing white when you. Let's just go January 2025. Click on buy and call. It's the strike price here, $22.13. Anything below it's in the money. Anything above it is out of the money. Out of the money. So let's click on in the money and see what happens. Well, this will be a bad trade here. Simply because there's no one interested in it. It's 100% profitable, but no one's interested in it. It got zero volume and zero interest. See what it is a option is a contract between two parties. So if you don't have anyone interested in selling or buying your option, then you just be putting in a trade. You just be putting in a trade for nothing. So here's the same thing, 0, 0. So let's and see another thing is instead of you buying a call, like what I'm trying to show you guys, you can actually do this. You can actually go here, buy, click on share, and we're gonna buy 100 shares. So I'll let you guys see what the price of this will be. You buy 100 shares, and still 100 shares at $22.13. You will need $2,213. So what you do, you would turn around and click on review and see it's asking for a deposit because I'm gonna have the money in there to cover that. But you would simply make your deposit, and then once that trade settles, then you can go back, go to an option trade on that same account, and you can do sell a call. Like I said, anything below it is out of money. Anything above it is into the money. And as you can see, the profit goes up significantly. So you will simply hit. And of course, like I say, this is just an example. And this is an example of when you wouldn't want to trade on, because there's no interest in it. There's no volume. There's zero interest, and that wouldn't be a good delta number either. Let's scroll down and do this the same way. It's just not gonna go because it's not a good stock. It's a cheap stock. Let's go down into the money. See, this will be a bad stock. Yeah, this would this would definitely be a bad stock. So you wouldn't want. This is how you lose money, by not knowing what to invest in. See, that's why I tell you guys that you need to. That's why I tell you guys, if you just starting out in the stock market, just invest in the S&P 500. And I think let's see what the S&P 500 is trading at today, because it's getting expensive as well. You might have to have $500 just to buy one share. Yeah, $545. And see, the market is going to do what it's supposed to do. It's going to continue to grow, get bigger and grow, even more profitable. And if you got a stake in it, then you too can share in that profit. But you sitting around on the fence, waiting for something special to happen, it'll never will happen. Because eventually the S&P 500, it might grow to a whole 1,000 by the end of the year. Right now it's at 545, and it's June, so we got another 6 months. So it just might reach 1,000. And if you're already in it, then all that gain that's your profit. But you can. I'm quite sure some of y'all, you working every day, you can get up $400-500 to invest in the stock market. And if you're going to be using a Robinhood, you need $500-600 just to start with Robinhood. And the market is recovering from the pandemic, and it's going up. It's going back up. And if you ain't on it now and riding the wave back up, then you could be priced out of the market as well, as a average or working class individual. So you're gonna have to find a way to get in on it. But then again, Robinhood, once you get a Robinhood portfolio, and I think you have to build your account up to, I think it's maybe 600 or 1,000 that you build your portfolio up to, and then you can start using fractional shares. And fractional shares is, instead of buying or getting into the S&P 500 and it costs you $500, you can do a fractional share and actually get into it with as little as $5. And it might take you a while to build up to that, to build up to where you have 100 shares. It's gonna take you some years. If you don't have any extra money, you can start out $5, $10, $25, $100, and you can do that. You can do $25 every week. $25 every week. That could be $200 or $300 a month. In 5 or 6 months, you have 3 or 4 shares, and you just keep on going until you build up your portfolio where you have a excuse me, where you have 100 shares in one particular stock. And then once you have 100 shares in that particular stock, then you can turn around and do a trade on it and do a sell a call. And once you sell a call on a position, that's when you really start seeing big profit. But we have to take baby steps at first. If you are new to investing in the stock.
Trading success is not easy. In the first year, you think